Hey there! Ever wonder what happens to your money once it's safely in the bank? Spoiler alert, it's not just sitting in a vault. Banks are using your cash to make themselves richer, often at your expense. And here's the spicy part. They're not just holding your money, they're running a dirty money machine. Banks don't just hold your cash, they launder trust. They profit from crises, fund shady deals, and treat billion-dollar fines like parking tickets. From hidden fees to sneaky investments that tank economies, today we're pulling back the curtain on how banks use your money against you. Stick around. Your savings account and that trusted bank logo in a whole new light. Let's expose the game. Let's rewind to 2008. The housing market crashed, millions lost their homes, and the economy teetered on collapse. But while ordinary people drowned in debt, banks like Lehman Brothers and Goldman Sachs got bailouts. Yes, your tax dollars to stay afloat. Enter Michael Burry, the real-life investor portrayed in The Big Short. Burry noticed something sinister. Banks were bundling risky subprime mortgages into AAA-rated investments, then betting against their own products. Translation? They knowingly sold garbage to customers while secretly profiting from their failure. Families thought they were buying safe homes, but banks were rigging the game. When Burry exposed this, Wall Street laughed. "You don't get it," they said. But he did. He bet against the housing market and made $100 million, while banks used your savings and pensions to fuel their reckless bets. Burry's story isn't just about genius. It's about how banks use your money to gamble against you. They win when you lose. And when they lose, you bail them out. Sound familiar? What's the lesson here? Banks thrive when we're in the dark. They profit from complexity, secrecy, and our trust. But Michael Burry's story proves something revolutionary. Awareness is power. When you see the game, you can change the rules. That's why we make videos like this. To pull back the curtain. Remember, this isn't about creating anger. It's about taking action. Want to stay ahead of the tricks? Smash that subscribe button and join our community. Every new video arms you with knowledge on how to build wealth. Let's start with a mythbuster, the illusion of safety. When you deposit $1,000 into your bank account, you might think, "That's my money, safe and sound." But here's the reality. Banks don't stash your cash in a shiny vault with your name on it. Instead, they only keep about 10% of your deposit on hand. The rest? They lend it out to other people, charging them interest, while paying you pennies in return. Let's break this down. Imagine you deposit $1,000. The bank keeps $100 and loans out $900 to someone else at, say, 7% interest. They make $63 a year on your money, while giving you maybe 50 cents in a high-yield savings account. That's like your friend borrowing $100 from you, throwing a party with it, and handing you a single Skittle as thanks. Now here's where it gets wild. This isn't a modern scam. It's been happening for centuries. Back in 1694, the Bank of England was founded to fund a war. How? By lending out customers' deposits to the government. This system, called fractional reserve banking, is still the backbone of modern finance. Your safe money isn't just sitting there. It's fueling loans, credit cards, and even risky stock market bets. But wait, what happens if everyone tries to withdraw their money at once? That's called a bank run. And it's why banks love to say, "Trust us, we've got you covered." Spoiler alert, they don't. During the 2008 crisis, banks froze withdrawals, and people couldn't access their own cash. Even today, the FDIC only insures up to $250,000. Got more than that? Good luck. Here's a question for you. Would you lend $1,000 to a stranger for 0.1% interest while the bank charges them 15%? Probably not. But that's exactly what you're doing. And when you need your money back, suddenly they're scrambling. "Sorry, we need a 3-day notice for large withdrawals." Sound familiar? Drop a comment below if you've ever felt like your bank's vault is just an illusion. Oh, and let's talk about safety. Banks love to brag about security, but they're not protecting your money. They're protecting their ability to use it. Think of your deposit as a free loan to them. They win, you lose. Still feel like a VIP? All right, let's keep the momentum going, uncovering how banks launder your trust. Let's talk about a dirty secret. Banks don't just use your money, they abuse it. Take the Danish bank scandal, Danske Bank. where 200 billion euros of suspicious cash flowed through its Estonian branch. The bank turned a blind eye to high-risk clients. You can Google the chilling details, while pocketing fees on every shady transaction. Here's the kicker. Banks often treat fines for money laundering as a cost of doing business. One major bank paid $1.9 billion in penalties a few years back. Sounds huge, right? But that's just 5 weeks of profit for them. It's like a kid stealing lunch money, getting a slap on the wrist and doing it again tomorrow. And during economic downturns, banks double down. In 2008, one Wall Street giant bet against the same toxic mortgages they sold to customers. They made billions while families lost homes. Today, banks scoop up assets cheaply during crises, foreclosed homes, distressed stocks, then flip them for massive profits. Your pain, their gain. Think I'm exaggerating? During the 2020 pandemic, a top U.S. bank raked in $30 billion in profit, while millions lost jobs. How? Fees, predatory loans, and trading on chaos. Here's a question. If your bank profits from crises and questionable activity, is it really on your side? I hope this makes you rethink your savings account. And you may be wondering, what's the solution? First, move your money to ethical banks or credit unions that reject dirty cash. Next, demand transparency by using apps that track where your cash flows. No more secrets. Another way to approach this is pressuring lawmakers by supporting politicians who push for real penalties, not just wrist slaps. Finally, stay loud and report suspicious fees or activity. Regulators have to listen. Remember, your power lies in choosing where your money sleeps at night. Moving forward with how banks use your money. Let's talk about credit cards. The shiny plastic traps banks dangle like carrots. They'll lure you in with promises of 5% cash back or free travel points. But here's the dirty secret. Those rewards are a mirage. Banks aren't rewarding you, they're baiting you. Why? Because they know 40% of cardholders only pay the minimum balance, and that's where the real money is made. Let's break it down. Suppose you owe $5,000 on a card with 18% APR. If you pay just the minimum, usually 2 to 3% of the balance, it'll take you 12 years to pay it off. You'll end up dishing out over $4,000 in interest alone. That's like buying a used car and paying double because the bank said, take your time. And those 0% introductory APR offers, they're ticking time bombs. Miss a payment or go past the promo period, and banks slam you with retroactive interest on the entire original balance. Imagine renting a movie for free, but if you return it a day late, they charge you for every movie you've ever rented. Ruthless, right? But wait, it gets sneakier. Banks strategically raise your credit limit to tempt you into spending more. You're approved for $10,000. Treat yourself. They're not doing you a favor. They're setting you up to drown in debt. A 2023 study found that people with higher limits spend 30% more, even if they can't afford it. Here's a question. Have you ever felt stuck in the credit card cycle? Like no matter how much you pay, the balance never drops? Wondering how to fight the system? First, tackle your debt using the debt avalanche method. By paying off high-interest cards first, you can save thousands over time. Next, consider balance transfer cards. Move your debt to a true 0% APR card. Just make sure to read the fine print. Another smart move is to automate payments. Setting up autopay for your full balances ensures you avoid interest entirely. Finally, cut the cord by using cash or debit for daily spending. This way, you eliminate the risk of racking up impulse debt. Your turn. Which strategy will you try first? Comment below. Let's turn your debt roulette into a winning game. Let's keep the momentum going. Now let's talk about something creepy. Your bank knows more about you than your best friend. Every swipe, every purchase, every midnight snack run, they're tracking it, packaging it, and selling it to advertisers. That a personalized ad for protein powder or luxury handbags? Thank your bank for ratting out your habits. Imagine this. You grab coffee every Monday at 8 a.m. By Tuesday, your phone floods with ads for artisanal beans and thermoses. Coincidence? Nope. Banks monetize your routines, turning your life into a product for corporations. It's like your bank is that nosy neighbor who peeks through your curtains, then sells gossip about you to the highest bidder. And it's not just ads. Ever applied for a loan and got denied? Your spending data might have been the reason. Splurged on a vacation last year? Suddenly, you're too risky for a mortgage. Banks judge you behind closed doors, using your habits against you. Here's a question. How would you feel if a stranger followed you around, jotting down everything you buy? Unsettling, right? That's exactly what's happening. You might be asking yourself, how can we fix this? Well, let's dive into the solutions that can turn things around. First, ditch banks that treat your privacy like a bargaining chip. Switch to institutions that vow not to sell your data. Yes, they exist. Next, weaponize privacy settings. Opt out of data-sharing programs buried in your account terms. Most banks hide these switches, but they're there. Then, demand transparency. Use apps that show exactly where your data's going. No more secrets. Finally, shout louder. Support laws that force banks to ask your permission before profiting off your life. Remember, your data isn't just yours, it's power. Moving on to the next on how banks use your money against you. Let's talk about banks' favorite magic trick, greenwashing. They'll slap a leafy logo on your account, promise carbon neutrality, and tell you your money is saving the planet. But here's the reality. Your deposits are still funding oil rigs, coal mines, and pipelines. Banks love to play both sides, posing as eco-heroes while bankrolling environmental disasters. Imagine this. You open a green savings account, picturing your cash planting trees or funding solar farms. Instead, it's quietly funneled into a fossil fuel project that's bulldozing rainforests. Banks do this because dirty energy guarantees long-term profits, even if it torches the planet. They'll send you an email about Earth Day, then approve a billion-dollar loan to a coal company the next morning. And those green bonds they brag about? Often it's just rebranded old projects. It's like a fast food chain selling salads while secretly dumping grease into rivers. Here's a question. Have you ever felt duped by a bank's eco-friendly claims? Like they're saying all the right words, but your gut says liars? Oh, absolutely. Because nothing says saving the planet. Like a bank plastering a green leaf on their logo while funding fossil fuels behind the scenes. Curious about strategies to outsmart the system? First, stop feeding the beast. Move your money to banks and credit unions that prove they reject fossil fuels. No vague promises. Next, become a detective. Dig into where your bank invests. If they're funding pipelines or deforestation, call them out publicly. Social media loves a villain. Then demand receipts. Ask your bank for specifics on their green initiatives. How much went to renewables? How much to oil? If they dodge, you've got your answer. Finally, unite. Support campaigns pressuring lawmakers to ban greenwashing. When banks can't lie, they're forced to act. Let's keep the excitement rolling. Dive into the wild world of the casino of Wall Street. Let's talk about Wall Street's favorite game, playing roulette with your life savings. Banks love to pretend they're cautious stewards of your money, but behind the scenes, they're throwing your cash onto high-stakes bets in the stock market. This isn't investing. It's gambling. And guess who's funding the casino? You. Here's how it works. Banks take your deposits and use them for proprietary trading, fancy jargon for, we're betting on stocks, crypto, and derivatives, and keeping the profits. If they win, jackpot. If they lose, they raise your fees, slash interest rates, or worse, get bailed out with your tax dollars. Remember 2008? Banks tanked the economy with reckless mortgages, then used your savings to stay alive while families lost homes. But here's the kicker. Banks lobby governments to keep these games legal. They argue, we're creating liquidity. Translation. Let us keep gambling with your cash. It's like a toddler demanding a cookie jar, except the cookies are your retirement fund. And it's not just stocks. Ever heard of dark pools? These secret trading hubs let banks and hedge funds make deals in the shadows far from public scrutiny. Your money? It's the invisible fuel keeping these shady games alive. Want to learn how to take on the system? First, starve the beast. Yank your money out of too-big-to-fail banks and park it in credit unions or community banks that don't play Wall Street roulette. Next, become a watchdog. Demand your bank disclose exactly how they're using your deposits, No more vague answers. Then rally your tribe. Support politicians and activists pushing to ban proprietary trading. Laws like the Volcker Rule tried to rein this in, but banks keep finding loopholes. Finally, hit them where it hurts. Use social media to shame banks that prioritize gambling over guarding your future. Remember, your money shouldn't be a poker chip. Let's keep the momentum going. Let's dive into how banks silence you. Let's talk about the ultimate betrayal. Buried deep in your bank's terms and conditions is a clause that strips away your right to fight back. It's called mandatory arbitration, and it's the banking industry's dirty little secret. By signing up for an account, you've unknowingly agreed to never sue them, no matter how badly they screw you over. Here's how it works. If your bank charges bogus fees, freezes your account, or even loses your money, you can't take them to court. Instead, you're forced into a private arbitration hearing run by a company the bank pays. Surprise, surprise, they rule in the bank's favor almost every time. It's like playing Monopoly where the bank owns all the hotels, controls the dice, and you're not even allowed to roll. And here's the kicker. Banks spend millions lobbying to keep this system in place. They claim arbitration is faster and fairer, but really, it's just a way to silence you. Remember that time a major bank opened millions of fake accounts to meet sales quotas? Customers couldn't sue, even when their credit scores were ruined. Here's a question. Have you ever skimmed the fine print? Be honest. Most of us just click agree and pray. But what if that tiny text is a trap? If you're ready to burn the fine print rulebook, follow these steps to take on the system. First, refuse to play their game. Switch to banks or credit unions that don't force arbitration clauses. Yes, they exist. Next, turn detective. Use free online tools to scan your current bank's terms for sneaky language. If you spot arbitration or waive right to sue, it's time to walk. Then, amplify your voice. Support lawmakers pushing to ban mandatory arbitration. If banks can't silence us, they'll actually have to earn our trust. Finally, spread the word. Share this video with someone who still thinks their bank is looking out for them. And there you have it, how banks use your money against you. Let's recap the 7 ways they've been playing you. First up, the grand illusion of safety. Your deposits aren't sitting in a vault with your name on them. They're loaned out, gambled with, and turned into profit machines, while you're left begging for your own money. Next, the dirty money machine. Banks don't just hold your cash. They launder trust. They profit from crises, fund shady deals, and treat fines like parking tickets. Your pain? Their quarterly bonus. Then there's the credit card roulette. Rewards? Smoke and mirrors. Banks dangle points to lure you into a debt trap where interest charges bleed you dry. It's not a game. It's rigged. After that, the invisible sale of your life. Every swipe, every purchase, every habit, packaged and sold to advertisers. Your bank isn't just holding money, they're holding a dossier on you. From there, the greenwashing lies. That eco-friendly account? It's funding pipelines and oil rigs while banks pat themselves on the back for sustainability. A forest fire dressed as a garden. And let's not forget Wall Street's casino. Your savings fuel reckless bets on stocks, crypto, and derivatives. Heads, banks win. Tails, you lose your shirt. Finally, the fine print conspiracy. Buried clauses that strip your right to fight back. Banks cheat. You get silenced. No judge, no jury, just corporate tyranny. Let that sink in. For decades, banks have turned your trust into their trillion-dollar playground. But here's the twist. You're not powerless. First, move your money to ethical banks that reject dirty deals. Next, demand transparency. Force them to show where your cash really goes. Then, weaponize awareness. Share this video. Expose the tricks. Finally, stay loud. Support laws that put people over profits. If you found this video helpful, I highly recommend checking out my next video, which complements this one perfectly. Smash subscribe and join the community. Every click weakens their grip. Share this with someone who's tired of being played. Stay sharp, stay skeptical, and remember, your money should build your future, not their empire. Until next time, keep your eyes open and your cash even closer. Thanks for watching, and I'll see you in my next video.